Hey guys, what's up? Spenny here. So Goldman highlights double-click key takeaways, says Palantir continuing to improve product market fit, reiterates buy with a price target of $34. Now, before we do get into this video, make sure to subscribe to this channel if you guys want to see more Palantir content. And if you find this video informative, please feel free to drop it a big thumbs up. Really helps out to grow the channel. So one of the key reasons why they're reiterating a buy with a price target of $34 is because of their supply chain disruption. So the supply chain sector is key for disruption, and I already knew about this and I was already making videos about this way before any analyst was even talking about this. How did I know that Palantir was going to get into this sector? Because I'm an investor in supply chain stocks. I've done tons of research in this sector, and it's one of the best sectors to invest in right now, and it has been since actually August of 2020. I'm invested in this company right here, Zim Integrated Shipping Services. I recommended the stock a little over a month ago, and it's up 50% since that recommendation, and this stock is still gonna even double from here in my opinion. Just so much upside, so undervalued, P ratio of 7, like come on, it's insane. But anyways, we're not talking about Zim. Key thing here is that analysts are really slow at recognizing Palantir's value, and now they're starting to understand the potential. Now, something I do want to point out though, we don't know when Palantir is going to actually turn around and go into another bull run. Something to keep in mind, and I agree with Jeffries right here. They say Jeffrey expects further downside to software valuations near term, but sees investors returning after reopening trade given robust demand. This was on March 29th. I don't fully agree with them in the sense that software companies can't actually see price appreciation in the short term. However, I don't think they're going to see a lot of love until the reopening trade is done. So I do agree. The reopening trade is where investors are really focusing right now. But as a long-term investor, you don't go with the crowd. You invest where people aren't looking. Everybody's looking at those reopening trades right now. So you, as a long-term investor, should be looking at stuff like Palantir, all of these different tech companies that have seen no love the last couple of months. A lot of them are down 40+% and representing great buying opportunities. Now, the $34 price target is impressive. It gives a lot of upside. And YouTube's favorite investor, Stockmo, he says that he likes to invest when analysts see a 20% plus upside. So Stockmo must be loving Palantir right now, because if we look here, $34 is a 53% upside, analysts are saying. However, in my opinion, don't invest because an analyst sees a lot of upside. Do your own research, come up with your own conclusions. Never invest because an analyst sees upside. I've seen many stocks get buy ratings and then the next few weeks they drop 40%. In my opinion, it really doesn't mean much, but it's not a bad thing. It's not a bad thing. At the end of the day, Goldman Sachs and these different banks, these guys are Wall Street. When Wall Street starts looking bullish on stocks, it's very possible their money will start pouring into these stocks. And that's what's going to happen when the reopening trade starts to die down and people look elsewhere. And the reopening trades are looking fully priced. So I don't think we're actually very far away from something like Palantir to go on that next big leg up. So yeah, I'm kind of kidding about Stockmo. Don't invest in a company just because it has 20% upside according to analysts. That is a very scary way to invest, especially if you don't even know who that analyst is. There's a few analysts who I personally follow on Twitter, but there's probably only one or two that I actually trust. So keep that in mind. Another person who's buying up the stock is this guy right here, the founder of Barstool Sports. A lot of you probably recognize this face. He actually has an ETF of his own, and you can see Palantir Technologies right here is in the ETF. So just another guy who's bullish. And right now, in my opinion, Palantir is really accumulating a lot of long-term investors in the low $20 range. Everybody who I listen to in comment sections, different forums, they're all in this stock for the long term. A lot of the popular stocks lately, there's been a lot of investors just looking for short-term gains. You know, they want that quick buck. I don't see Palantir investors like that. Every comment I see is basically people wanting to hold this for the long term, and that's the kind of stocks I like. I don't like when a stock goes up, you know, 400% in 2 months like Palantir did back here. That's unsustainable, and there's going to be a big correction that always follows after that. Obviously, there's some exceptions to that, but the rule of thumb is when you rise 400% in 3 months, you're going to see a hard correction, and obviously we've seen that. And right now, the low 20s is a great buying opportunity in my opinion. Anyways, guys, that's all I have for you in today's video. If you liked it, please drop it a big thumbs up. Feel free to subscribe to this channel for more Palantir content, and I'll see you guys on the next video.